This is a very interesting space because I feel like we have five different time zones, or maybe like six. So thanks for everybody for coming on.
Okay, cool. So I'll get us started. Thank you, Benjamin. So welcome everybody to another sunny day in DeFi land. Today we are going to cover what the cornerstones of the DeFi ecosystem have been talking and thinking about. Over the next hour, we want to run through major events, themes, topics that have transpired in DeFi. And we're doing this in public because you all deserve to be insiders. So let's get started. Um, for our participants, we have Sam from SparkDAO. We have Kane of Infinex and also Synthetics. We guess, yeah, I see you've joined. Michael of Curve and Tarun should be joining of Gauntlet Robot Ventures and Benjamin of CAP, whom I got to know when he was building QiDAO. And I myself, I'm Studi of Kraken Ventures. So, first of all, I want to talk about the people. As you all are leaders of the decentralized finance world, you also represent retail. And I feel one of the big themes of the moment right now for retail are meme coins. But behind it, there's this underlying issue, which is actually what are the opportunities for retail in the current meta? Like, how did we get to this meme coin frenzy? And what does this actually mean for, the current state of DeFi and the future of DeFi? I'll hand it over. Let's see. Why don't we start with Kane? Because I know that you're building Infinex as particularly a platform to onboard retail.
Yeah, so I think the funny thing is we don't actually represent retail. That's one of the interesting things about DeFi is like DeFi has really been built for the kind of ideological enthusiast crowd for the last like 5 or 6 years. Um, and it's one of the reasons why I think sorry, did I lose you guys?
No, we still got you.
I can
Oh,
hear you.
okay. All right. Sorry. The host just sorry, the host muted and it went super quiet for a second. Yeah, so it's one of the reasons why I think we've struggled to attract retail is because we haven't focused correctly on what retail wants. And so, one of the things that Infinex is doing is trying to bridge this gap between the DeFi enthusiasts who, are happy to do all kinds of weird and wonderful things, bridging and different wallets and private key management and all of the hard, fun stuff that we think of as crypto, and make it more accessible to someone who maybe feels more comfortable on a centralized exchange because it feels like a Web 2 platform and you just click some buttons and something happens. Um, I think there's another thread in this as well, which is, why is retail going for meme coins? Like, where is this incentive coming from? And I think that has to do with like capital formation in crypto at the moment, and what some of the issues are there in terms of how capital is raised in crypto and how much of the price discovery happens privately these days, which is very different from the way that it was raised back when most of the DeFi projects started. Many of the DeFi projects we have today came out of ICOs, right? And so, at that time, the retail of, 2017, 2016, 2018, were able to access it, were able to access those projects early in a way that they can't really access current DeFi projects. So I think that's another reason why we've got this kind of gulf between what you might call, in scare quotes, retail and, the people who are building DeFi, the people who are excited about DeFi, and again, we've got to find ways to bridge that gap to make DeFi more accessible for everyone.
Yeah, thanks for that. And I'd love to get a perspective, perhaps. I mean, we have Sam on as well, and I think we've seen Maker go through a major rebrand, brand becoming Sky, and I feel that there's like with this rebrand, there's more focus on how like this brand appeals to various different communities, and perhaps there's like a retail element that was built into there when you were thinking about it. I mean, could you share a bit more about that and how yourself and Sky are thinking about the relationship with retail?
Yeah, sure. So you're exactly right. The rebrand was based on the view that DeFi right now is still pretty small. Most retail is using centralized exchanges right now, but we want to continue to bridge this gap. And there's like many, many different ways this is happening. So in terms of the brand, DAI, when that was originally come up with and Maker, DeFi was like, it didn't even exist. It was like 2015. It was just sort of an idea at that point. So these names like were not carefully thought out at the time. And so while DeFi like OGs really like know and respect Maker and DAI, to grow to that next order of magnitude, which we want to do, it's good to have a little bit of pain right now to fix the brand such that we can grow into this next phase. So the big thing with the rebrand was finally getting USD in the name. This is like kind of a simple thing that like just tells people what the product is a lot more easily. So that was a big win. But like more in general, like just along these lines of connecting DeFi and retail users. So like there's Spark in particular is looking at this from like a liquidity allocation perspective. So there's many ways this happens. Maker historically and even today has kind of the opposite problem of most exchanges and protocols, in that there's an excess of liquidity in the protocol, and we're trying to find ways to allocate it. And so some of these exchanges, as we saw earlier in the year, people like trading perps and stuff at pretty large size. Products like Athena have come online, which really help bridging this liquidity gap so that not only can we bring CeFi or centralized exchange users into DeFi, but we can also help bridge that liquidity gap by going out into centralized exchanges and providing liquidity there.
Yeah, and any other thoughts on this topic? Because also I guess the link back to meme coins and maybe a bit of like the history of DeFi and how we've gotten to where we are from maybe like Benjamin or Michael. You've both been in this space for so long.
Yeah, maybe I'll give a different perspective. I think, yeah, if you look at it from all the way back from ICOs until now, yeah, there were definitely more opportunities to get into these governance tokens, right? And there's like more upside for retail. But I think perhaps from the last cycle up until now, what has really changed is that a lot of these DeFi tokens are not performing very well, and most of the DeFi flywheels, particularly a lot of the newer decentralized stablecoins, really relied on token emissions. Like their whole flywheels. Think about like Ohm, Mim, to some extent Frax. Like they really were built on top of Curve and other dexes, and they relied on a lot of these emissions. But now that these emissions are not what they used to be, you see, a lot of drying out of like APRs. Like it's not, you don't get like the 100 to 100% APRs you used to get. And so I feel like perhaps a lot of retail that was interested in DeFi, not for the decentralization or anything like that, but for the money, are now moving to meme coins because they just are not interested in 20% yields or something like this. And so I think for us as DeFi builders, we need to think about how can we make products that don't just rely on token going up, or maybe users using our platform, but instead, look for other sources of yield that are not relying on these other factors.
Yeah, that's actually a very, very good point. And that's something we've been thinking about more recently, as token emissions are definitely not as huge. And the focus like of LPs started shifting towards something more sustainable. So sometimes we saw only sustainable pools at the top by even trading volume, which was pretty remarkable. But of course, we need to think really well how to how to build things which scale sustainably, not via tokens. Tokens are still good, but basically, um, whatever products should produce more naturally for the system than token emissions. Essentially, that. So if that works, then it scales. If everything relies on token emissions, well, that only works in a very young phase of the token existence.
And even aside from token emissions and how people maybe like I think that there is this idea that people would align their usage with protocols that they also thought were going to be successful because they have this stake in it with the governance tokens. Like now, I think this meta has moved towards points now, and so like in this current meta of points, like how as protocol designers, like how are you thinking about what that means for retail? And do you think that this points meta is going to last a long time, or do you think that it's coming to an end?
Yeah, maybe I can chime in. So that actually, I did hear a lot that people don't like points as much anymore because they actually want they played with points and now they say, oh, we want real tokens, right? But if you think about it, points are essentially a pre-announcement of a retrospective airdrop, kind of that. So we probably did maybe the first retrospective airdrop, and Uniswap did also, and that worked really well. And that really bootstrapped community. But that only worked because nobody really expected that. And right, what points do is it's the opposite. Everyone expects some airdrop, and everyone tries to speculate on what it's gonna be, and then it's a totally well, yeah, and then it's traded on Pendle, so it's totally different play. And yeah, I don't know if I like it, or like if other users like it anymore. Well, some do, but it's a kind of a different beast, yes. And I think it will exist, but I think a lot of attractiveness of points is fading away at the moment, or at least it feels like that.
Yeah, I mean, I think it's a reflection of the fact that there are multiple parties involved here, which are kind of adversarial, right? You have the project teams, which are trying to distribute tokens to ideally users that are going to be um, kind of sustainably interested in the project. Then you have people who want access to the project who can't otherwise get it, who genuinely want to participate in the project. And then you have this third group, and this is where the adversarial stuff comes in because they're adversarial towards both of those other two groups of people who are just trying to extract max value. They're just farming yield. They've got idle capital, and they're trying to like maximize their return. And they have no interest in either of the other two parties in this relationship. And so from that perspective, points were actually a very good uh, design from the projects because it shifted power back to the project away from these adversarial farmers. The problem is that the other party involved, the people who wanted access, got even more wrecked. And so the kind of unintended consequences of this shift in power back to the project teams in terms of controlling the emissions of the tokens was that you actually lost the people that you really wanted, and they are the ones who really got burned because they genuinely wanted access to the project. That was their only way to get it, especially after selling tokens became impossible. The only way to get access was to farm, but then industrial farming came in, and so you've got this like constantly shifting equilibrium. But I think points probably shifted it too far, and so now you have this kind of sentiment issue where the industrial farmers, while the points campaign is going on, are strongly incentivized to be shilling the project and saying, it solved world hunger. It's the best thing that anyone's ever seen. the most egalitarian thing, et cetera, that copy pasta or whatever. But then as soon as the points are converted to tokens, they flip bearish, dump everything, and move on. Meanwhile, the people who actually are interested in the project basically get cut out from access completely, and so they, while this is going on, are much more bearish, but they're just drowned out by the industrial farmers who are creating this kind of false sense that this project is doing so well. And once the farmers go, you're left with this negative sentiment, and it's kind of down only. So points seemed like a good solution, but it's not the actual solution to the problem. There needs to be a different solution, which is, I think, why if you're a project and you're doing a points campaign, you know, it's you need to figure out how you're going to redesign it in a way that gets the outcome you want, which is long-term sustainable interest by people who are going to participate in the project.
Okay, yeah, thanks for that. And so now, speaking of retail experiences, I want to move on to another big topic, of the last 2 quarters, which is UX and UI. So, user experience. How can we be doing better? There's been, these terms, chain abstraction, account abstraction, different types of like MPC wallets to manage sign-ins, taking away gas fees, all of that, like as ideas that are coming up. But, I'd love to hear from all of you. Like, first of all, do you think that we have failed or done a poor job in terms of UX UI? And, can we be doing better? And what are you doing or what are you seeing being done that contributes to us doing better?
I actually really, really like to hear from Kane about this because I've tried Infinix and it's a really, really nice experience with passkeys, and you don't really need to know much about crypto to start using it. So we'd love to hear from him.
Yeah, so I think like the approach that we've taken at Infinex is to look at the things that and my favorite example of this is Curve, actually, funnily enough, right? Like the Curve interface is its own meme, which is like interfaces don't matter, right? It's like taking it to its like most absurd conclusion, right? That like you can design a system that's so good that the interface doesn't matter. The problem with that, I think, is that there's like only a certain size group of people that are willing to deal with that. That enthusiast community like gets the joke. They think it's funny. They understand that they're happy to like learn a weird interface and kind of deal with it. And the interface doesn't matter meme, which is kind of personified in the Curve interface, is kind of fun, but it does limit how many people are willing to do this. Like a normie who's used to TikTok is going to turn up to the Curve interface and be like, "What is this? Like, this is crazy, right?" And so, what we've tried to do at Infinex is start from like kind of the user behavior and work backwards. What does the user want to do? Um, and then once we know what they want to do, how do they want to do it? And the nice thing about this is that like we've got very good examples. We've got Bybit, we've got Binance, we've got Coinbase, we've got these exchanges that have millions of users who have spent a lot of time designing interfaces that will work for more retail users. Um, we just need to figure out how to replicate that in a decentralized setting without kind of throwing out all of the good stuff, without throwing out the fact that it's non-custodial, et cetera. And so this is a big aspect of what we're building, at Infinex, and we've integrated Curve, right? And so my view is that eventually there'll be more people using Curve via, the Infinex app than on the Curve dApp, because it's just an easier place, and they don't even need to know that they're using Curve. They sort of say, I want to swap stable coins, and it's like, well, Curve's the best, cheapest, most efficient place to do that, and the interface figures that out for them, and they just go from USDC to USDT or from whatever, and it works.
And Kane, do you think that there is like a kind of a time and place for a confusing interface in terms of kind of, I guess, not like explicitly gatekeeping products, but making sure that people who are being onboarded onto certain products, like they understand how it works and what is necessary to use it, as opposed to I don't know, TikTokification of some very risky financial derivative.
Well, again, like I think the Curve interface was a meme, right? Like you know, it was designed to kind of appeal to a specific group of people for a specific reason at a specific time, But like, I don't think it's going to be long-term sustainable.
Yeah, frankly speaking, our interface is probably not exactly what Kane is talking about, because that was a kind of the first, the most how to say, the most ancient looking interface, and but the idea is actually probably right in some sense, especially the last part, that if Curve is integrated inside, people don't even have to think that they're using Curve. Maybe if we take that to an extreme, we could have some financial products which use DeFi and crypto, and people wouldn't even know that they use DeFi and crypto unless they really look under the hood. Uh, but yeah, that's a way. That's an interesting way. It actually exists in traditional software. For example, I don't know. Well, let's say Oracle database, for example. Although maybe it's not like as much used as it was at some point, but it's well, it's still powering a lot of things. Um, Probably the biggest commercial database, and people don't even think like that their stuff is stored in Oracle. They use some sort of user-facing apps. So yeah, having essentially DeFi algorithms composed into some different products as a building block, as a Lego piece, is probably a good one. But it doesn't really cancel the fact that one still needs to build user-facing DeFi applications. And then we come to how to make it convenient to use, while even, let's say, MetaMask is really inconvenient for retail to use.
And can I just ask you, like, actually one question, Michael? Like, how does it actually make you feel that, like, very often people they use examples of Curve to be like, oh, DeFi has terrible user interface.
Well, that's uh, it. It kind of was from the very beginning that you either love it or hate it, and
Hmm.
people were arguing in Twitter that this interface is horrible. No, this interface is the most amazing thing that I've ever seen, and that apparently created some engagement, which was naturally sort of marketing, or at least at the time, right? So other people who saw, they were really curious. Oh, what is actually that? I should check that, since their opinions are so split.
Yeah, so maybe there is this little bit of Kanye style, like it's provocative, like going on over there.
It is provocative. It is provocative, but it's still like, if you want retail, yes, you do need to have something retail friendly, and then one needs to think a little bit beyond just just the website, more like thinking about all other processes, like what you do with the wallet, uh, and wallet by itself is usually not the most convenient thing. So, and it would be really interesting to hear experiences of other builders, how to overcome this inconvenience of actual Web3 wallets.
Yeah, and I mean the other builders that we have here with us, like what do you see as the biggest bottlenecks and opportunities when it comes to UX UI?
Yeah, so I mean, so for at Spark, we run a front end, but it's not designed to be like the most robust thing ever. Spark originally launched, I think most people know it as lending market, but really these days Spark is pivoting more to just B2B capital allocation across all of DeFi. So I think to improve things, like we have to keep pushing on a number of fronts, including like wallets, blockchain scalability, how to deal with gas, all this kind of stuff. Just and like, there's a lot of the smartest people working on all this stuff, and so I have no doubt, and I'm very optimistic. Like pretty soon, I think we should see this stuff getting heavily abstracted away. The end state is going to be that the user doesn't really know or care that there's a blockchain in the back. I mean, maybe they care, but they won't know. It'll be as seamless as a centralized exchange. And so that's the future that we're building towards. My team in particular is not going to be doing that ourselves. So we're going to be delegating this more to protocols like Infinex, or wallets rather, and other protocols like Aave, Morpho, and just lending through them so that users can access using the UI that they prefer. And it's just going to be a better experience all around. And on our side, we're just focused on liquidity provisioning. And so this will be within the same chains, making sure that US dollar liquidity is available to when users need it. And then for interchain, this will be automated systems to rebalance between protocols on so that users can really just use whatever they prefer, whatever lending markets. Say they want to use Aave on like base, they can just go ahead and use that.
Yeah, same for us at Cap. I think the goal is always just for people not to have to use the UI in general, right? Like Cap is just an interest-bearing stablecoin. There's not really much you're gonna be doing hanging around the website, right? Ideally, you just have swaps or people like 1inch or Infinex, and you just buy or sell the token. It's very different from when you have a CDP or a lending market and there's like several sites and a bit more complicated structures. So yeah, hopefully Infinix, you guys are the the front end for all of us, and we don't really have to worry about doing front ends anymore.
That's the goal.
Okay, so let's move on now to politics and some of the more diplomatic events that have occurred in DeFi recently. I think one of the most recent sort of online tiffs that was going around was that a lot of DeFi founders didn't feel that the role of DeFi was being addressed in the rise of Ethereum. Am I understanding that correctly? And where, like, one, would you guys like to like unpack, how you feel about that, and where do things stand now? After I understand, Kane, you had a chat with Vitalik as well about this.
Yeah, so I think there was a little bit of a buildup of frustration, let's say, right? That like for years and years, DeFi was the main thing that was happening on Ethereum, and yet we sort of didn't get much love, right? The EF never really made much of an effort to support DeFi projects for DeFi founders.
And like
Vitalik,
like
yeah.
maybe what would that love have looked like? Because I think that was one of the topics that came up for sure. Like
Yeah,
what would
I
have
mean,
support look like?
like, okay, let's say you're, Michael, right? I'll use Michael as an example, or a Stanny or whatever. Let's say you're Stanny, and you've built the largest lending marketplace on Ethereum. Um, I would sort of expect Vitalik to reach out and be like, "Hey, is there anything I can help you with?" Right now, I've talked to Vitalik about this, and I tweeted about it last week. I think that he's realized the mistake in this, and I think it genuinely was a mistake. There was a point where like I kind of got to where I was like, this can't be a mistake. This has to be intentional, right? And I think where the problem came from is, Vitalik had this idea that like DeFi will be fine. DeFi doesn't need his help, but there are lots of other things on Ethereum that are important and valuable that actually do need help, and so it's better to focus on those. And I sort of said to him like, it's not zero sum here. You know, like we're not asking for, like Stanley doesn't need money. He's got plenty of money, right? Rune doesn't need money. Like, these projects are not looking for capital or anything like that. They're just looking for some support and, maybe kind of reinforcement that like they're working on important things, right? There was a period in time where I think Vitalik was very reticent to retweet things or talk about things. He's gone a little bit more into wartime mode, which I think is great, right? Like, I would expect Vitalik to retweet the Sky rebrand and be like, hey, this is the really cool thing that's happening on Ethereum. Maker, one of the oldest projects, one of the most important systemically critical DeFi projects. I would expect him to step up and help to amplify that message that this is an important thing going on. And like, you would be surprised how small things like that are so impactful to a founder, right? Like the person who made the chain that you're doing this thing on, even crawling over broken glass to make work for the last 5 years, is retweeting your announcement saying like, hey, this is really important, pay attention to this, because Vitalik has a huge audience, and if he says something's important, then people will pay attention to it. And the Sky rebrand from Maker is important, so he should do that. And so if he doesn't do it, it feels like, well, what's going wrong here, right? But as I said, I think that after having that conversation with him, in Singapore, uh, it landed. Like, he got it. He was like, okay, I think I've like maybe made a mistake in my approach to this. So, yeah, I think it's going much better. I think from the people that I've spoken to, that have spoken to Vitalik in the last month or so, they feel like there's a different approach, a different posture, which is great. That's kind of what we wanted.
Yeah, I mean, first of all, thanks for having that conversation, really on all of our behalf. And I think that, these Twitter dialogues, they can really move the needle. And Benjamin, you've spent a lot of time around core Ethereum researchers, and I think Vitalik too, like when we were both at Zuzalu together. I think you've been at a couple of other zoo related pop-up cities. How do you feel that DeFi is being treated in these communities that sort of rotate around the robustness and future of Ethereum?
Yeah, I mean, I remember in Montenegro, I think we were the only DeFi team, like back when it was Cheetah. Um, and it was like, you don't talk about DeFi because you don't want to look like I don't know, we looked like meme coin people. And it was like all like super like, you know, I don't know, academic types, and it was not nice. But I agree with Kane. Like, I don't know what you said to him, man, but after Singapore, everything changed. Like now at like the Susalu stuff that's happening in Thailand, like the guy's sitting down with us like every Friday to like look at everybody's like DeFi project and give feedback. Like that's insane. Like he went from like don't talk to me about Uniswap to what is this perp text you're building on Mega ETH? So yeah, it's definitely gotten better. But I do think people are interested. It's not like they think it's like I don't know, just like really bad for the space. It's just they haven't really looked into it.
I think this is the brilliance of Vitalik, right? Like, I didn't say much to him. I just presented a logical argument, and he sort of. I watched the cogs turning. There was like 45 seconds where like his brain was like recalculating all of his priors, and it like popped out the answer is like, oh, I've made a mistake here, and he just changed his posture, right? Which is something that I think is pretty amazing. There's a lot of people in space that if you started trolling them for doing the wrong thing, let's say, right, or making a mistake about their posture towards something, they would just be like, fuck off, and, block you or something like that, right? Like, the fact that Vitalik was willing to engage and also rethink his approach is like pretty bullish. And, I think, again, like, he just he made a mistake. I think it was like a tactical mistake, and he's correcting that mistake. And I think it's going to be very very powerful for everyone. So I'm very excited for that.
Yeah, maybe if he applies his brain to, I don't know, to improve DeFi governance, for example. He really loves thinking about these topics, but he kind of didn't apply them to DeFi. So maybe that would be actually very good.
Yeah, that is an interesting thing. Like, I mean, even when we were at Zuzalu, like some of the key topics were like emerging cryptography, decentralized governance, public goods funding, and yeah, they like I think DeFi does give you an opportunity to not discuss those in abstract. Like we have a sandbox right here to test those ideas out in. And I do think, I mean, a lot of DeFi is just, forks of the blue chip protocols. I think people can be, innovating in other ways, including, these ways as well. So, okay, another topic in politics. A big topic this year has been this kind of saga between Spark, Morpho, Aave, MakerDAO, the reconciliation question mark, Aave Skyforce. Perhaps let's say, Sam, like, could you offer some anthropology, some history on this and where we are now?
Yeah, I mean, to be clear, I mean, I never really viewed it as like a rivalry personally. But yeah, I guess there was that in the air. Um, for me, it's always just been maximizing the yield of Maker's balance sheet and also maintaining the peg. These are the two core tenets of any stablecoin. So yeah, I mean, originally we did launch the lending market and Sparkland, and then at the beginning of this year, the rates started spiking, and perps on centralized exchanges in particular, they reached like it was like 80% or something. It was crazy. So we really wanted to tap into that yield and capture it because it's real users paying to borrow, and there's just a huge liquidity crunch, and we have the excess liquidity. So in March of this year, yeah, we partnered with Athena and Morpho. Morpho's architecture worked really well for us able to capture most of the borrow rate while still having this small equity portion that would provide additional protection because it's a new protocol. So we decided to um, use Morpho's lending infrastructure. We connected it with a D3M, which is like direct liquidity injection. And then we allowed users to lever up on Athena's USDE and SUSD. And I think it was a huge success. Like it grew to like 500 million or so. But yeah, I mean, the evolution of this is really just a continuous evolution in my mind. Like um, this idea of like lending to other protocols instead of us doing everything internally, I think makes complete sense. Aave is the largest lending market, and we're the largest decentralized stablecoin. So those two go pretty hand in hand. And it's like the size of DeFi is just so small right now. So like, why be fighting over it in a zero sum way? Like we should all just be working together to improve the financial system at large.
And can you share more about this Aave Skyforce and this sort of this final, this big announcement that's being made between MakerDAO, originally MakerDAO, and Aave now?
Yeah, the Sky Aave Force, this is just the start of deeper integrations across all of DeFi. So as I said, Aave is the largest lending market, so they're the natural like first target for us for allocating. And so as the first steps that we've done, a D3M, this direct liquidity injection module, it's really is the same as like an AMO module. It goes by like many different names. It injects USDS liquidity directly into the Aave Lido instance, such that users can get access to large amounts of capital as they need it. This is just the first step. And the other thing that we did was we launched USDS into the main market. We put Spark rewards on it, and Aave's putting rewards on it. And so really, like we help grow the TVL of Aave. We can find new borrowers. It's really just a very synergistic relationship, and I think it's just going to continue and grow. And we're going to add more protocols. Yeah, this sort of collaborative. Environment is something I want to see continue, and I'm really excited about it.
So like so on one hand we can call it collaboration. I think on another hand, I've also noticed that sometimes DeFi it kind of functions in cartels. And now we have Sam from Frax here with us. Like I especially Frax's initial rise, like sort of this, this teaming up with the Curve and Convex and in a way, I feel that, over time you see DeFi protocols, they start to collaborate to sort of like grow and rise together, maybe even at the expense of others. Like, what are your thoughts on that? Like, is this collaboration? Is this cartel building? How do we think about politics when growing DeFi protocols?
Hey, Studi. Hey, guys. Thanks for having me on. Yeah, I mean, this is actually a great
Straight
conversation.
into the fire.
Yeah, yeah, just jumping right in. I was last week with Kane at Permissionless, and we were talking about this stuff as well. I think the most important thing is looking further out in
I don't think we can
2025 and
hear you,
above.
Sam, if
Uh,
you're speaking.
can you guys hear
Okay,
me?
mic issue.
I can hear him.
Can you
I
guys
can
hear me?
hear.
I
Oh,
can.
Okay.
weird. Okay,
Yeah,
I
Twitter's
can't.
sometimes weird.
All right, I'll come back. All good.
Okay. And I think the most important thing is basically to actually be able to build like this culture around DeFi and the chainization that's going on. I'm a very big proponent of chainization. I think that there's a lot of like new chains that are launching. People know that Fractal has launched a few months ago, actually, like before kind of this wave of Unichain and everything. And the most important thing is having these economic zones that are kind of going to be chains, this digital nation out in like cyberspace, right? These sovereign technology, what like call them network states, and they need financial engines to go, right? And so, for example, Aave is like one of the biggest credit financial engines, right? Frax issues currencies, and we have our own financial engine with Frax Finance, right? And I don't know if I'd call them cartels, so to speak, but more like as there's more and more chains or digital nations that go up, that they have to all be powered by financial engines where people can create liquidity, they can actually have credit, use things that are good as collateral, and that's the most important thing. Frax has kind of planted its flag, so to speak, with Fractal or high performance DeFi first ecosystem chain, and obviously Uniswap has done the same, announcing that recently. And the way that I like to think about this stuff is that where are the biggest financial engines growing? Obviously, Ethereum mainnet is the big one, and then Solana recently with all of the trading, perps, and all of these things going on with meme coins. But the way that my mind works is that where will these digital nations grow and which ones will be the biggest, and how do you work together in a positive sum manner? And as people know, I think finance is one of the few places actually that's positive sum where wealth can be created. Everyone can be better off. There's not a finite, like supply of like energy can't be created or destroyed, but wealth can be created and destroyed. Everyone can become more wealthy, right? The whole piece of the pie can increase for everyone rather than zero sum taking of other pieces of the pie. So when we're growing Fractal, our main view is how can we do it so that everything is positive sum, and how can we make it so that it's one of the most important digital nations. So I like to think of things as chains and economic engines, and I think that doing that we can actually work together with everyone here and all the big protocols, Sky, Aave, Frax, to actually make this happen on a select big few chains with good trickle down kind of the long tail of chains that are coming with different innovations and everything.
Yeah, I first of all, I really appreciate this call out on calling them digital nations because yeah, okay, so as a VC, I'm also thinking about like M&A opportunities, and one thing you don't see is M&A between on-chain entities, right? Even though it's a common thing in like other types of business models. And the closest thing that I could come to think of is, at least in like this era of the world, you don't really see M&A between nations. Like that's not very common like in the world that we live in. But it also I think like underscores the importance of diplomacy, coalition building, and yeah, deciding, like I think frac style, do you decide, to rise together, or do you want to cut down your competitors directly?
Yeah, and one thing that's actually really important here is when we launched Fractal almost 10 months ago, early in the year, a lot of people kind of said, oh, Frax is doing so much, and why do you need a chain, and kind of this chain skeptic view of crypto. And we had a very, very strong vision and belief that every major kind of ecosystem will transition from being an ecosystem to, like you were saying, like a digital nation, and the economics of that will change. Instead of being an ecosystem, it'll be sovereign digital nations that are trying to create value and create economic engines. And so now that, for example, Unichain came out and said the same thing, right? You see like Hayden Adams
Mm-hmm.
saying, you can think of chains as kind of these sovereign servers. It's just a different way of saying sovereign country, essentially, what people have a view of as like a country. But now in cyberspace, I think it's less legitimate to have the same kind of skeptical view. Because if you're arguing against Uniswap, oh, they're just doing too much and stuff, you kind of look like the unreasonable person, right? Because Uniswap is one of the most well-known long-term oriented protocols and big flag bearers in the space. So I see what's going on as a pretty big validation of our kind of view of where DeFi and the industry is headed. I'm actually really bullish to see Unichain and see how Fractal and everyone here can build both on Unichain, Fractal, Base, and all these places. And the right way to think about it is, how can we create some of the biggest economic engines on some of these chains to make them, quote quote, systemically important players in the industry in the next couple of years.
Yeah, and while now that we have Sam on here, I think we this is a great time to move to our last set of topics, which is around stable coins. So this has been an incredible year for stable coins. We've seen a sector growth of close to 40% from 120 billion 12 months ago to I think like about 165 billion today. Um, Very few new entrants. I think in the top 10, it's just Athena and Usual recently. But I'd love to get your thoughts, especially as we talk about diplomacy, like the market structure for stablecoins. Is it going to be a monarchy, right? That like, one rules them all. Is it going to be a duopoly? Or are we moving towards like coalition-based systems, especially with the idea of like sub-DAOs, or the way that, Frax has worked to partner with other stablecoins in creating interesting flywheels, or even
Yeah,
like a whole other market structure that I'm not considering.
yeah. I mean, I'd love to also know what Michael and Sam McPherson think after this. But like, I have definitely unique takes on the stablecoin structural space, and I think the real thing here is that the important stablecoins that'll continue to gain market share are the ones that get deeply integrated in growing economies, right? And again, it kind of goes back to the chain, and which chains and digital nations will get bigger. I think I actually said this a few times before, is that I think it's easier to get a stable coin from 0 to 100 billion market cap by creating a new chain or sovereign nation to 200 billion market cap in the next 5 years, and then having the stablecoin power that chain, rather than trying to take 100 billion market cap from Tether. I just don't see it happening. Like, I just don't see, or like Circle, right? Take 30 billion from Circle. In fact, like the way that I see it is the world on chain and above is like changing, and trying to play the same game of like, can you get all of these projects to like remove USDC or something like that in like a zero sum game, or try to pay more yield to, integrate your stable coin maybe over like USDC or Tether, is not the actual way to do it. The actual way to do it is to be one step ahead in the emerging economies, the emerging chains, the emerging sovereign nations, so to speak, and then make sure that your issued currency is deeply integrated in there. I think that, for example, Tether, barring some implosion or something like that, or something kind of, non-BD related, I think it has 100 billion or 130 billion now market cap essentially on lock. People aren't going to take that away. At least that's my view. The way that you get bigger than Tether or Circle or things like that is by seeing the new opportunities that are structurally in front of you in the next 1 to 5 years and making sure that you grow into those places, right? Like if there's chains and places that you think have the right mental framework and worldview, and you're early on those, and your issued stablecoin and asset is deeply dug in and liquid over there, and you're working with the top people in those, you know, sovereign chains, so to speak, then you will grow more than Tether. But if you're going to, for example, think of how can I take, you know, 50 billion market cap from Tether and Circle, playing the same game of like centralized exchange, you know, dislodging pairs and things like that. I don't think that's going to work. I don't think you can pay your way through like yield or something like that to take market cap. And maybe it's just my view of like, you know, positive sum and things like that in terms of like, and the thing that you can't take these things away because they're so entrenched. What you have to do is you have to create and see where the opportunity is. And things are definitely changing very quickly, right? Like in the next 1 to 5 years, there will be tons of very systemically important chains and economies. The actual advent of like AI onboarding tons of new users. In fact, like one of my own views is like the MetaMask killer or the wallet killer is not just like a different wallet. It's not like Coinbase mobile wallet. It's actually like AI. It's basically inference to crypto transactions. People will solve the hallucination issues or things like that, or there will be training wheels. But the real MetaMask killer will be AI transactions on chain, AI finance, and AI agents and things like that, and making sure, for example, you are the AI friendly stablecoin, so to speak, right? That is deeply entrenched and focused on this kind of area that's going to onboard the next 1 billion users. That's how you get bigger than the stablecoins that currently exist in the meta today. But you know, love to hear what other people think. It's definitely a different view, I think, than most people.
Yeah,
I actually,
Yeah. So I think it's
oh, that's fine. Just
go ahead, guys.
sorry, just kind of when Sam was speaking, it was like traveling to Mars almost, because it was very much out in the future. But I think if we go back to Earth, he is absolutely right that playing exactly the same playbook as Tether plays will not get you anywhere, of course. But I think I think the answer here is, no, there are two answers. One is, if you have products which preferably use your stablecoin, that could be one thing which can be helpful. Or, well, Sam was talking about chains which are going around the new stablecoin, for example. That's of course that goes to the same bucket, like as a product preferring to use your stablecoin. But I think one thing which existing stablecoins cannot do, and although like most of the growth of stablecoin market was due to Tether essentially, but what Tether and Circle cannot do, they cannot really easily share yield with users, and their yield is usually a very, very boring, not very high T-bills yield. Well, sometimes it was higher than DeFi yield, but most of the time it wasn't. And this was pretty much very well demonstrated by Athena, that you actually can have quite rather scalable yield, and if you share that, it actually grows your market cap pretty well. And here also, like a partnership play really does well. For example, if you pair one yield-bearing stablecoin with another, like there is SDAI, although there is USDS now, but let's say SDAI paired with Athena's SUSD, and that pool produces quite a good natural yield, and people are depositing, and it grows naturally. Well, although it does give points, but points plus yield are better than just points. So this pool does grow because of this sort of, well, I don't know if there was any partnership signed or this pool was just created, but apparently when all the stable coins in a pool share yield, people deposit liquidity, and liquidity grows, and this better liquidity for stable coin is always better for stable coins adoption, so it helps with adoption of a stable coin elsewhere, and it's kind of partnership between different stable coins working as a flywheel for both.
Yeah. So I want to differentiate between the two different types of stablecoins. So there's centralized stablecoins like USDC and USDT. These look more like an on-chain M1, where they're more basically money. And I do not view decentralized stablecoins as competing in that same market. So USDS in particular, I view it more of as like a yield-bearing or more of like a generalized broad bank M2 on top of the M1 base that is necessary to make the whole system function with US dollars. So USDS is what I'm excited about it in the near future is extending credit and building first-class integrations like across chains such that users can tap into this relatively safe risk-adjusted yield, which is the savings USDS yield, currently 6.5%. This can outperform the T-bill rate that only that the full reserve stablecoins like Circle and Tether provide, precisely because they're doing broader lending. And there's many opportunities of good yield, risk-adjusted yields within DeFi. Like as Michael said, Athena is like a good example of that. So USDS is able to tap into this high yield, de-risk it, and then forward it to users as a really senior position stable coin. And so the massive size of USDS of 6 billion right now ensures that we're able to tap into these yields at a high scale. And with new developments that we're going to be rolling out in the next couple months, people are going to be able to deposit into the savings USDS yield from USDC at basically any size. So 100 million, whatever. You can do this on Base. You can do this on Arbitrum. We'll basically fill the capital as it's used and have automated systems to rebalance across all of DeFi. Currently, we have about 3 billion in just like sitting in T-bills. This is basically idle capital. We plan to allocate this across all lending markets such that, again, you're on Base, you're on Arbitrum, use Aave, use Morpho, use whatever you want. You can borrow 50 million and you can have confidence that within the finality of the wider space, like the finality of the block times, we'll be able to fill that liquidity in as you use it. And this is what I'm really excited about.
And Sam, if I understand correctly, correct me if I'm wrong, like a good portion of USDS is linked to USDC. So, what does decentralization, what does a decentralized stablecoin mean, for you in this context?
Yeah, I mean, I think what
I meant like
oh,
Sam from
oh,
Spark,
oh,
but
go ahead, go
actually
ahead.
either, but yeah.
You can go ahead, Sam. I also have an opinion. Go ahead, Sam.
Sure. I mean, I think there's two categories of decentralized stablecoins. There's pegged and unpegged. Um, all the larger ones are pegged because that's really the only way to scale. And decentralized stablecoin, more or less in my mind, is referring to the on-chain M2 supply of US dollars, meaning you don't have this strict narrow banking requirement to have a full reserve of treasuries. You can broaden and do wider lending, such as what Maker did from the beginning, which is CDPs and stuff like that. And because there's this huge knowledge asymmetry in DeFi yields, Sky is able to tap into this and really get the best possible risk-adjusted yield across all of DeFi, TradFi, and even CeFi now with things like Athena. So yeah, this is what it means to me.
Yeah, and I just want to add that I think that USDC that MakerDAO has is actually a huge strength. I mean Sky, it's a huge strength because like you alluded to it before, you guys can tap into a bunch of novel yield, because T-bills are not always the best thing. In fact, usually they're like some of the worst thing, right? There's Ethena, there's like obviously Cap. Now we're launching with more adaptive yield. There's a lot of stuff that you can do on chain, but perhaps there's not like the liquidity there to find it. But you guys do it for the users, and then all that users have to do is just hold you guys. Um, so I really like that you guys have that kind of war chest because you're able to find the yield that retail maybe wouldn't be able to find.
Yeah, and on that topic, on the topic earlier of how do we think market structure develops? Like as I mentioned, there's like this potential like monarchy or monopoly, there's a duopoly, then there's coalitions. And I've thought of what Sky is doing with sub-DAOs is kind of like this like coalition system. Like Spark Sam, could you explain a little bit about that and how you think, like what your thesis is on how market structure is developing?
Yeah. So the sub-DAO model is an attempt to do an actual scalable DAO. So previously, MakerDAO was running into all kinds of scalability problems. Basically, when you have a very flat, token vote structure, it's prone to like politicking and lobbying and all this kind of corruption, basically. And it's not going to really work with large amounts of money at stake. So, whether it's possible to do governance at scale in a truly decentralized way, I think that that's still a question. But the sub DAOs are like the latest attempt to try and have the core structure be very, very simple. So it basically, Sky Core does wholesale credit out to the sub DAOs, Spark being one of them. And then it's Spark's jobs to go and build advanced systems to try and optimize that yield while maintaining the requirements of the peg. And then the way this is kept in check is by you have multiple redundant sub DAOs that and competition is how everybody's held accountable. If Spark is underperforming compared to the next sub DAO that comes out, then they won't be DAO that's outperforming it will be protocol. So it's like this constant feedback mechanism where there's a meritocracy within the sub DAOs, but then there's this central control, but it's very agnostic. It sets sort of very broad rules that the sub DAOs are. It's a sandbox that the sub DAOs are allowed to play in. So we'll see if it works. I think the jury's still out, but I think it's a very interesting attempt to actually do governance at scale.
And have the sub-DAOs launched yet, or are they all kind of being internally incubated, or are you partnering with existing stable coins like to convert them into sub-DAOs or kind of nurture them as sub-DAOs?
Yeah, so Spark is more of a proof of concept at this stage. The sub-DAO hasn't launched. It will soon. And then we'll see more. I mean, the whole system is not going to actually stand on its own until there's multiple sub-DAOs. But we're really just iterating on the process and trying to build out a good system for the long run. In terms of other stable coins, I think this is a very collaborative environment. I think Athena is like the best example of this. Spark allocates into Athena and probably will increasingly do so. And Athena also allocates to Savings USDS as one of its reserve assets. So this mutually beneficial relationship is not exclusive to Athena and Spark and Sky. I think this just generalizes across all stablecoins. So stablecoins, they can stand on their own. They can go out and find new unique use cases. And then there can be partnerships to reinforce where things work, even outside of the sub-DAO model specifically.
And right now, like this seems to be the era of yield-bearing stablecoins. Can someone tell me, like, why is there room for one more? And if we let, one more flourish, like what kind of characteristics does it need to have to really flourish in, this like rather saturated space that we're in at the moment?
I think maybe it makes sense for us to talk about that since I guess Cap is like the latest entrant in the interest-bearing stablecoins. Yeah, everybody shares the stablecoin or perhaps the interest-bearing, but that doesn't mean that they're all the same, right? So like we have a lot of T-bill wrappers, especially when for a while T-bills had a higher yield than crypto. Everybody and their grandmothers like they rushed to make T-bill wrappers. But now that that's not really cool anymore, so now we're going back to crypto native yield. And one of the many, opportunities were like the funding rate that Ethereum is kind of doing right now. Obviously, they're running into some issues, which is why they're having a lot of like the T-bills backing it at the moment. I think that there's a huge space for interest-bearing stable coins that are not monolithic, right? They don't just have one strategy, or they don't just have one team executing the strategies, but instead they naturally shift as markets change. I think this is going to be very important, and we really haven't seen anything like that in the past. Um, at least not automatic, right? It's always like teams have to do things, humans have to pull kind of like different levers, and I really don't like that. I think there's space for something that's a bit more automatic, a bit more like Ethereum or like Bitcoin.
So it sounds like there's actually a lot of innovation happening on the product and the yield side of stablecoins. It's not that everybody is, quote unquote, a yield-bearing stablecoin. So maybe you can like bring us back to the basics and just say like, why are stablecoins great front ends for financial products on chain?
Yeah, I mean, stablecoins are essentially, I mean, at least decentralized ones in the way we use the term, are basically just tokenized bank deposits. So like, I think there should be like a highly competitive industry, because like if you look in the traditional finance, it's a lot better to have a highly competitive and diverse set of banking and finance and stuff like that. So I do not think it's going to consolidate into one thing, just because not everybody has the same risk profile. Maybe people don't want to lend money to USDS. They don't like our risk strategy. So having as many options out there as possible is the best for everyone, in my opinion.
Yeah, I actually wanted to add here. I absolutely agree with having multiple options. Actually, there are there are different yield-bearing stable coins now, which represent really different strategies. I mean, T-bills could be a boring strategy, but could be Ethena is something not really done at scale before, although there are similar stablecoins. But also there are innovations around CDPs. So CRV-USD is one thing, but there is also LUSD. There is the there are DAI obviously diverged from a pure CDP stablecoin, so it's more like a strategy already, I would say. But there are plenty of CDPs, and there are stablecoins like FXUSD, for example, which is also something slightly different. So each stablecoin represents kind of its own idea, and then maybe you can make another yield-bearing product which looks like a yield-bearing stablecoin, which is built on top of these individual stablecoins. So you could actually compose different things, because DeFi is composable, and maybe you can actually have one project focusing on one thing which it does best, and compose it in some multi-product, I would say. And it's very good, I think, because you can diversify sources of yield, and yeah, that's I think very useful. It just so happened that there are many new strategies appeared, and that's why like many new stable coins appeared, and some of them scaled fast, some of them maybe not yet, but yeah, we shall see.
Yeah, Sam, we have time for one quick comment, and we'll move to wrap up.
Yeah, for sure. So I think the yield strategies are totally right that Michael and Sam from Spark was talking about. I think the more important thing to kind of round out everything is like, I think if we just list all the different types of like important important yield strategies. That you could maybe even say there's 5, maybe even 10, right? Like T-bills, CDPs, basis yield, some other stuff that hasn't been, found yet, or a hybrid of these things. But the more important thing is all of these things will need to power ecosystems and economies, like I was saying before, right? Like these different chains and opportunities. And as you were saying, Studi, you're saying, why another, stable coin, or like why, people might say, why should another one be released? People said the same thing about chains, right? They said, why another one? Why Unichain, or like why Fractal, or something, or like Arbitrum already exists? Well, the reality is that there's going to be a lot of these sovereign important economic zones, and the yields of these stable coins are extremely valuable, and they power these sovereign kind of networks, right? These sovereign nations. And the most important thing is not why another one, but it's more like, where are these going to power, the yield and economies of scale in these kind of new chains, right? And so, like for Fractal, right, we have CRV USD, we have obviously Frax, like USD stablecoin. We hope to actually have a lot of other stuff, like talking to Sky and bringing SUSDS. And the idea is more like there's opportunities where people need yield in these emerging economies. And the most important thing is who's going to supply those, what stablecoin strategies are going to supply those, and where. So it's not so much why another one, it's more like, where is this other one going to take root and actually create value and yield? Because at the end of the day, there's probably like 5 real like actual yield strategies. But the more important thing that I like to think about is who and where can work together on what chain, on Fractal, on Solana, and how can we make sure that the yield is powering these separate sovereign chains. So yeah.
And actually, so one more question before we wrap up. Um, so Curve has really been game-changing infrastructure to allow the stablecoin sector to flourish. For this next chapter of stablecoins, what do you all think is infrastructure that we are going to need, or that is on your wish list that we don't have yet?
Yeah, I guess I can go first. So pretty much what I said before. What we have a huge issue with liquidity fragmentation right now across DeFi. The market is extremely inefficient at large scales, and so we need to solve this if we want the user experience to be seamless. Like, you shouldn't care what chain you're on, you shouldn't care what protocol you're using. All that matters really is what your collateral composition is, and there's some details, but like this is really the important thing. And so smoothing over all these inefficiencies is what we're focused on fixing right now, and I'm confident these will be solved like within the next year.
Yeah, for me, I think I also I'm worried about the fragmentation of liquidity, especially with all these new L2s coming up, because all of us are doing yield-bearing stablecoins, right? And most of the yield comes from Ethereum, right? That's where most of the leverage demand is, most of the MEV, the arbitrage, whatever you're doing to make yield, most of it comes from Ethereum. But most of users are on L2s because it's much cheaper. And now getting the yield from Ethereum to those L2s can put the users on the L2s at risk, because oftentimes we're having to deal with very centralized bridges, or maybe bridge standards. Like, I mean, I won't name names, so we're not funning, but very centralized stuff. And I think we need better infrastructure that's native, that can protect L2 users when they're accessing the L1 yield.
Yeah, I guess I'll kind of round out a little bit too from my slightly different take on it. Is I actually don't think too much that liquidity fragmentation is a big issue. It's only a big issue right now because there aren't natively yield bearing stablecoins issued yet on L2s and like Solana and these big kind of zones of economic sovereignty. Right now, it is definitely an issue, right? Like the liquidity fragmentation, having to use these, like you were saying, bridges and these kind of things. But what will probably happen is that there will be real deep liquidity native issuance on leading L2s. There's already a little bit on Arbitrum, hopefully soon on like Fractal, Unichain, all of these places that are, big ones, right? And so that will actually allow people to natively participate without the risk and fragmentation. I think in a couple of years, the way that people will be interacting with all these sovereign kind of economic zones is through abstracted, not UIs, but AI inference, right? You move one asset to another, and by speaking or just by actually saying how these things will work. You won't have to do MetaMask and like read the UI or something or anything like that. In fact, you'll be able to actually convert one thing to another based on the fastest way of doing things between natively issued, economic zones. So maybe I'm thinking a little too far out, but I actually think that this stuff will fix itself. Right now, it's basically when things are the most fragmented and kind of messy right now. But as things take shape on these important chains, people will be safer, and they'll also be able to enjoy more native integration, native yield, native redemptions, and minting and all that stuff.
Yeah, cool. Well, thank you, everybody. Today we had a chance to cover retail opportunities, politics and DeFi, improving user experience, and spent a lot of time on stablecoins. I think that's yeah, where a lot of our hearts are, especially with the daddies of DeFi. I didn't ask them if I could say that, by the way. But thanks for a discussion for where your heads and hearts are right now in the world of DeFi. And yeah, hopefully we can put this together again. And